Good afternoon, everybody. Welcome to TraderMerlin Show for your Tuesday afternoon edition. Hope you had a great day out there today. And we got our continuation of a little bit of a dead cat bounce, it seems like. We'll talk about those levels and how they looked and where the market was rallying up to here in just a second. I'm going to start, though, with a question from a viewer, which came out this morning. And thank you for this one. It actually gave me a whole new segment to talk about on today's show. And it might be of interest to some of you. That question is all about AI and the chip war that might be going on. Now, I've brought this up many times because I do believe that as time goes on, all of these companies will be competing. Of course, we have Apple's making their own chips, and Amazon's making their own chips, and Microsoft and Google are all making their own chips, but generally those are tailored towards a very specific purpose. Now, going forward, we shall see if in fact this does eat the lunch of Nvidia. But the question that came through today, let me get the question there, was from John. He says, read an article this morning about Google competing with Nvidia. As a shareholder of Nvidia, should I be worried? Well, maybe I should set the context a little bit about what that article was alluding to, and that is basically that Google has their own chips. Now, I actually did a little bit of research today to dive into how powerful those chips are, and do they actually compete with Nvidia's products? In fact, they do. However, for those of you who are in the tech space, and we got some geeks, some nerds here as well, there's a specific chip called an ASIC, Application Specific Integrated Circuit. And typically these are a configuration that tailors a chip to perform a very specific task, a very specific set of tasks. And that is what Google's chips do. Google's chips are called TPUs, which is Tensor Processing Unit, where Nvidia's are GPUs, which is Graphics Processing Unit. So when you line them up, let's just make sure we understand that they are not the same thing. Google's TPU is really designed for repetitive actions, kind of the same thing over and over and over again, kind of grinding out. That would be things like ads. That would be things like search, right? So search, ads, and cloud-based functions that kind of do the same things over and over again. Google's product excels there. But there's some bigger fundamental differences. For example, if you look at the Nvidia GPU, the B200 or something, that has a lot more versatility of what it can do, from rendering to straight machine learning. It's much more flexible than Google's product. Now, the question from John is, as a Nvidia shareholder, should you be worried? Probably not. Remember, Google still is one of the largest buyers of Nvidia chips. Why? Because when you go to Google Cloud and you are a Google Cloud customer, generally people are expecting to access Nvidia's chips. Why Nvidia's chips and not Google's TPU? Because Nvidia's chips have this whole suite of software wrapped around it. I've emphasized this point a few times in the program or before, where this is why a lot of difficulty is going to be for AMD to jump in there with a brand new chip, or Broadcom, or Google, because the suite of software around their hardware is already very robust on their CUDA platform. Google doesn't have that. So while Google does have a pretty dominant position, they don't have to use all of those NVIDIA GPUs to run things like search or ads or cloud computing. The customers still want access to NVIDIA, so they will still buy Google Cloud Services knowing they're going to access NVIDIA products. Now, some customers will migrate straight over the TPU if they're looking for those repetitive actions, but I thought this was kind of interesting. The reports I saw said there could be 4 to 5 times as many NVIDIA GPUs as there are Google TPUs. Okay, so that's some fundamental differences. Another big difference here is that Google's TPU, and of course we'll look at Google's chart today, which surged, I think, on this. Google's chart today, fantastic, up 1.62%, big, nice pop, and continuing this great rally that it's been under for quite some time. These TPUs, unlike NVIDIA's chips, which are sold to anybody who can afford them, right now, Google is not selling these TPUs to anyone. They're behind their wall. It's basically just all Google's domain. So if you want to use any of this TPU power, you have to be a Google Cloud customer. That makes it a bit unique, whereas NVIDIA is kind of selling to anybody who would like to have the chips, and then they have access to their software suite. So to John's question here, should you be concerned as a shareholder of NVIDIA? No, I don't think that you should. They're still going to be buying plenty of chips from NVIDIA, right? Google will still buy plenty of chips from NVIDIA. Now, over time, Will Google try to migrate its customers over to the TPU units, which are much cheaper to manufacture than Nvidia's GPUs? Probably. And as Dan just puts in there is room for both. Totally agree. I don't think that this is something you should be like, oh no, I'm totally worried about it. When you should get worried as an Nvidia shareholder is if a company comes up with a suite of software products that competes with Nvidia. The chip, I think, will probably see other chips rise up and compete and get performance relatively close. Let me see if I can show this to you. I actually did, I typed into Google today. Of course, it might be biased because it's a Google product. But I go, how does Google TPU stack up against Blackwell? Of course, this is the Blackwell 200, which is when they're comparing against it. And you go, as far as peak performance, 4.6 petaflops for Google's TPU. That's the V7 Ironwood. And then NVIDIA's Blackwell B200 is 4.5. So relatively the same there. Memory, 192 gigs. Same for both, although you can go higher with the NVIDIA chip. Interconnect bandwidth, 9.6 terabytes for Google's product, 14.4 for NVIDIA. So NVIDIA definitely has a huge lead there. Scalability, as I mentioned earlier, it's designed for massively tightly integrated pods connecting thousands of chips, up to 9,200 of them. I didn't mention that earlier. And then if you look at the NVIDIA one, it connects up to 72 GPUs with their link system. So I put here the software ecosystem. You do have some software programs built out, optimized for TensorFlow, JAX, XLA, compiler, but limited outside of Google's cloud, meaning once you get outside of Google's parameters, there's nothing there for you. Software system for NVIDIA, though, is dominant CUDA platform with broad framework support across all clouds and on-premise, meaning this is on Amazon Web Services and anybody else has access to all this, which gives a lot more flexibility. Other than that, availability, exclusively on Google Cloud if you want to get the TPU stack. With NVIDIA, pretty much everywhere. So the last piece here would be cost efficiency. It says that the TPU offers superior performance per dollar in energy efficiency for specific large-scale AI tasks within Google Cloud's environment, whereas the NVIDIA chip, it has a higher initial cost, but much greater flexibility and can reduce overall engineering and deployment costs for varied workloads. So, long-winded just kind of intro there, John, but I don't think that there is anything... You lost me? Did you lose me? I think I'm still there. Everything looks fine to me on my end, so I'm going to assume I'm still going here. Rob, you might get a little bit of a disconnect. Yeah, I think that there is nothing to worry about. Google is still going to buy NVIDIA chips because customers are demanding it when they get Google Cloud services. Some of them may actually get migrated over to the TPU service, and that will probably grow. I think that one of the numbers I saw says that it could take up to 10% of NVIDIA's market share, in a few years. I'm not so worried about that at this moment in time. Now, on that news, we did see NVIDIA take a hit. Turn the lights off. Used to hear Merlin. It's been like 3 minutes, but I didn't go anywhere. I've been doing the whole show, and according to my stats, not one frame has dropped. Not one frame has dropped. All right, let's go look at NVIDIA. So NVIDIA's chart is interesting. I had this level drawn at 176.76. And while it's not the best zone or level, you can see that today we actually went way below it, but we did not close below it. So to me, this is kind of that pivot low that I'm looking at, other than the obvious one, which is going to be from much earlier, from back here in September, where that blue line is at 164. All in all, I think it looks fine. I think no reason to be concerned here, in my opinion. Remember, we are going to see more competition. Why? Because this is what everybody wants. Everybody wants super high compute for AI. NVIDIA is the leader. AMD, I would argue, is probably second place. They've got some chips that are pretty powerful, but they don't have that software suite. They don't have the name, unfortunately. I lost sound too for about a minute. Wow, interesting, Curtis. Everything seems to be going good on my end. Maybe I should do a little bit of a speed test here. Should be fine on my end, but I noticed that there's multiple settings when I start the show, and if I start the show as a ultra low latency, because I like to see responses faster, sometimes there are little issues with that. Otherwise, I may have to just switch over and start doing something. Oh, I see why. Now that you guys mentioned it, all of a sudden I'm... now that I go and check speeds. There you go. I do have AMD I have the Ryzen chip, which I actually love it. So it shouldn't be spinning now. Everybody hit refresh. Just type in and refresh your browser because it switched over to for some reason, my high-speed internet disconnected and put me on an old one. He's running a BitMiner on his. I wish, Dan. It's funny, when I was teaching this class in Dallas, we were talking about crypto mining, and nowadays it's impossible for a person like you and I to run a Bitcoin miner and solve a block of data. It's just not going to happen. But in 2017, kind of when I really got started in crypto, man, if I could have done it with just a regular home computer, I would have been mining Bitcoin all the time. Oh. Andre says it's time to use Amazon Internet. I got no problem with that if you can get more stability. AT&T's been pretty good, but I've got 396 download, 288 upload, so we're pretty good there once it switched over to the new network. So my apologies for that one. And that's all your fault, Rob. You were foreshadowing it. You almost willed it into existence that I would have issues with my computer today. Thanks a lot, buddy. All right, we were talking about Nvidia and just looking at that price chart. Again, I still think you're fine. If it gets below 164, then I think it should be one of those, all right, well, maybe I want to protect myself a little bit here because it hasn't been below 164 since July of this year. All in all, still an uptrend, even though that uptrend is slowing down quite a bit. So, John, thanks for the question. As an Nvidia shareholder, I don't think you need to be worried. Now, I guess if you're a Google shareholder, you got to ask yourself, should you be worried? This is one where I would certainly be setting some trailing stops here. It's really just accelerating faster and faster and faster. There's certainly a lot of great arguments to be owning Google, but as you guys know, my philosophy, which isn't always right, when something goes parabolic like I'm seeing with Google right now, I generally want to be more cautious and protective and be very careful there, because typically when things scream up like this, they come screaming back down, as we've seen many times. On another note, I don't know why this popped in my head. I had to bring it up. We talked about Circle. Notice now Circle, after, when did it go public? It went public in June. Since June, it's never been back to this price. And we were talking about how it will get back to its IPO price, and there it is. It's actually a really nice chart of pain. Now, the big question I have is, if you look at this chart here, there's two levels farther below. Right now, we're at $70 even. Well, there's the $31.16 mark and the $27 mark. Those are both pre-IPO prices that were established by the analysts. The question is, do we go back down to those levels? If we get down to $27 on Circle, I will be a buyer for sure. They continue to grow. They continue to get bigger. They continue to issue new products. They continue to work on stable coins for the U.S., for European Union, and my guess is they'll have stable coins for other parts of the world too. So I think it will be much better down the road to look at buying Circle, but right now, ugly looking chart. CoreWeave, I haven't looked at this one, and hopefully it's down because I dumped it. Okay, it really hasn't done much. I'm staying away from this one because my rule of thumb is if you take a big loss on something, you just don't trade it because of the emotional aspect, and I did lose quite a bit of money on CoreWeave on that trade back here. What I want you to focus on is these last three candles, okay? Forget about and I agree with you, Steven. I think that CoreWeave could have more downside movement, but look at the candles. Let the price tell you what is happening. Let the price tell you what to do. If you notice the last three candles, particularly this one from Friday and from today, you've got like these little hammer formations, multiple. Again, I don't think CoreWeave is that great of a company, but when you look at this, you got these long bottoming tails. At some point during Friday's session and today's session, these were giant red candles, really red-looking candles. Yet they've closed every day in the upper end of its range. That means that buyers are coming in and pushing this up. That, to me, should be viewed as a very positive sign for CoreWeave. Now, I'm not going to take this trade because, again, I got burned on it, and I don't want to have an emotional trade here. Obviously, I'd love to make the money I lost on CoreWeave back, but I'm not going to take this trade. I want to be very clear about this. I'm not going to take this trade. However, if you wanted to, how would you approach this? Well, for me, pretty simple. There's two entry points here. Number one would be on a break above today's high, which is $72.24. And then I would double down if we broke above $74.21. Right? Basically the high of today's candle and then the high of yesterday's candle once it ripped out of there. So two interesting points here for CoreWeave going forward. Right now it's up just a little bit in the after-hours session, but that's at $71.39. Your first entry point will be if it opens up down below this and rallies above 72.24. So not a bad looking chart, even though It looks horrible from the longer term perspective because it's just been falling and falling and falling since end of October. Those long two bottoming tails and candles are bullish in my opinion. It looks good. Actually looks good from a buy signal, but I'm not going to take that trade. Let's see. We got a whole bunch of stuff in here. Long way to the top. Better let it. Oh, we're talking about Google on that one. Meta headed back up. Certainly. Let me look at Meta here just for a sec. Meta had a great day today. 3.78% jump to the upside. But notice right where we're at. We talked about two levels yesterday. We talked about this 629.56, which is the origin of this red candle on November 12th. You also have another zone that was the origin of the first big red candle on November 6th. We're dead center of that one right now. We are literally dead center of that one as we speak. The question now is, does this level of supply between 632 and 642, does that hold and push price back down and continue the downtrend that Meta has been witnessing for quite some time? So again, if you're a Meta shareholder long, great, right? It's been a fantastic couple of days. However, you are in an area of supply. Yeah, question is now what do you do with it? It looks pretty good, but we're still in that bigger downtrend picture when we broke back down in August, and here we are making new lows, rally back up on a retracement. If we look at for those of you who are core strategy or trading academy students, you have an impulse and corrective phases. Impulses are generally strong and powerful. The corrective phases are usually slow and weak. Well, this is actually the opposite. You got this real big impulse move down and a super sharp corrective phase back up. Let's see if that one holds. But yeah, Meta, nice pop today. Obviously, I'm very happy with what's going on with Amazon. I do have the 235 calls against my position here. It was a great day. We're up 1.5% for Amazon, $3.39 pop. I've got 1,500 shares as we speak, so not a bad day. I'd love to see it close at $234.99 would be my ideal closing price for Friday, but obviously we've got Wednesday, Thursday, and Friday to go for this thing to move up about $6 before it takes me out. And if it took me out, I'd be fine with that. Remember, my average price right now is $220 when you take out the two premiums I've collected on the puts and calls I've sold for this. So $220 up to $235 would be a $15 per share gain on 1,500 shares. I'll take that. Certainly a nice Thanksgiving Day gift. So there we go. All right, where was I? I was off on different topics. I wanted to get to the core we've won, but I saw some comments come in there about retail sales. All right, looks like 235.01 to me. Dang it, Big Eb. Despite Big Eb, we got to work on a dinner date. I owe you dinner. Let's talk about retail sales. So obviously the retail sales numbers came out today. From the economic perspective, here you see, I'll highlight them for you. Retail sales numbers. U.S. retail sales were expected to go from 0.6% to 0.4%. They actually came out at 0.2%. Now, the good news is they're going up. However, nowhere near what was expected. There's the, hello, where's my chart? Give me my chart. Okay, maybe no chart. Most people are going to focus on the core retail sales, which is expected to go from 0.6 to 0.3. And we came out at 0.3. So in line with expectations. So that's all fine and dandy. There we go. But not very high, right? It's certainly fine that we came out positive, but I'd love to see it at 0.5, 0.6, 0.7, and maybe those numbers will increase over the next couple of months. But for right now, still relatively muted. See if this chart does come up. There we go. There's the chart I was trying to get to initially. This is retail sales flat, and they came out at 0.2. So not great compared to expectations, but there were a bunch of companies today that reported earnings, and they did rather well. Let's go look at some of those. Some of the bigger names like Abercrombie & Fitch, A&F, they reported earnings. They're up 37% today. Man, 37%. And of course, you would not have been holding Abercrombie & Fitch anyway, right? No one here would have been holding this thing. It's just fallen like a rock. So if you got this one, you were gambling. But they beat earnings by quite a bit. They were expected to make $2.17, came out at $2.36. So that's a great beat for Abercrombie. Next is my nemesis, BBY, which I probably should put on my list of things to never trade again. It's up 5.34%, up to $79.66. Yeah, right, Steve? Who's buying this trash? Abercrombie & Fitch has been pretty popular one. Best Buy, I don't even know how they're still in business, honestly, but whatever, it is what it is. They beat earnings as well. They were expected to make $1.30 per share. They came out at $1.40. Great. You also had Kohl's. This is the one that was really the outlier today. Huge jump. Now, I don't know what on earth is happening with Kohl's. I mean, every time I go in there, I do find some cool stuff, but they were expected to lose 16 cents per share. They actually came out at 10 cents gain, positive. They made money this quarter. And their stock was up 42% during the trading session. Pretty phenomenal. And who knows, maybe this has to do with, Amazon returns can now be done at Kohl's, and therefore it's bringing more people into the store who happen to walk in and buy some stuff. Not exactly sure, but wow, what an earnings beat. And I agree with you, Steven. Wow, who's buying this trash? I'm definitely the guy who buys there, but very rarely. And I think it goes to what Mickey was talking about. Quite often you can get these really phenomenal coupon deals there for Kohl's, but they actually have some pretty cool gifts. If you're looking for unique birthday or holiday or Christmas gifts, they got some really oddball, quirky stuff that I always find fun. That's usually what I end up buying there. I could see Walmart and Costco, but any of these others are a gamble. Total gamble. I'm not refuting that one at all, Steve. I mean, it's easy to go and pick a winner like Costco and Walmart and Target, right? Easy to pick those ones. Micro Center is way better than Best Buy. Drew, it's not even a close comparison. Just the quality of stuff. No offense, but when you go into Best Buy, you get these typically young people have no idea what they're talking about, and I'd better off just finding the product by myself. Whereas when I go to Micro Center, it's predominantly tech-oriented, and man, they usually know their stuff. It's good. Bed Bath & Beyond customers jonesing for a deal. Got the good. All right, what do we got? I bought the Best Buy Samsung 70 OLED TV 700 out the door. We love it. All right, yeah, but I can probably get a better deal at Costco. Just saying. Shop around. Always shop around, especially this holiday season, man. There's so many great deals that are to be had. What else do I have in here? So I already covered this kind of Google chip strategy, which I think is interesting. That TPU part, look, it's a very specialized chip. It's not designed to be this robust Swiss Army knife type chip. It's very tailored to their specific actions. As I mentioned, things like search and ads and just their cloud business does give them a competitive advantage. And I think that the strategy there is that they are going to keep people in their ecosystem. If you want to have that kind of speed and cost and energy efficiency with TPU that you get over Nvidia's GPUs, then you got to go to Google. And it'll probably be cheaper that way to use their TPUs. Therefore, they keep you in their ecosystem. And those TPU chips are not available outside of Google. You can't go to Amazon and get them. So, but I do think that Google will continue to buy Nvidia's chips, just like Amazon is, just like Microsoft. And even though they're making their own chips, they're still using Nvidia product. All right, let's see. Rob's talking about Eli Lilly. Well, you're going into segments that I know nothing about, which is drug stocks. I don't do anything with drug stocks, but boy, what a fantastic chart. Man, it's so funny. I'm digressing here, but one of the first gigs I had. So when I was in college, I did an apprenticeship or an internship at a financial planning firm. My first day on the job, I'm literally in a closet with a computer, and my boss brings me this big old box, and she says, I want you to itemize everything in here. Take all of these statements from one of our clients, and I want you to put them all into separate spreadsheets. I want each one to have stocks, futures, options, Forex, and break it all down one by one. And this lady worked for Eli Lilly, and she had 600,000 shares of Eli Lilly. She was kind of high up there. But that was 1998. Let me go and show you. Let's just do it on monthly here. Because my recommendation for this lady was keep your shares. And they were trying to convince her to sell it so they could put her into mutual funds. But in 1998, dollar cost average, this thing was let's just call it $61. I'll move it even forward. We'll call it $60. And she had 600,000. Right? That's a huge amount of money. I mean, 600,000, let me do some quick math in my head. That is about $36 million. And if you look at it today, I really hope that she held on to her Eli Lilly stock. Holy cow. She might be a billionaire. Yeah, Eli Lilly to the moon, and I own none either. Well, part of it for me, Steve, is I won't do anything with drug stocks or pharmaceuticals. Now, that said, as a long-term investment, yeah, I'd be fine owning certain companies. I know that we see Michael here and, looking at something. I know you were big on PFE because of the dividend. Well, PFE on a monthly still looks like garbage. It's still selling off. Let's go back to the daily here and see if that has changed at all. And it's starting to show some strength, right? It's starting to show higher lows, at least since April, but the whole market's showing higher lows. So this is pretty good from a long-term perspective for Pfizer. But Eli Lilly, man, That is a hard chart to beat right there. Pretty absolutely amazing. Great till the FDA says something even remotely possible construed as negative about some obscure drugs. Right. And Dan, that's the main reason I don't. For those that want to know why I never trade drug stocks, biotechs, or pharmaceuticals, I was short a company that was in bad shape. I mean, I was looking at the fundamentals. The company was losing money quarter after quarter, like bad losses. The losses were growing, and I went, nope, I can't do it. I can't do it. There's no way I'm going to buy it. So I started shorting them and had a decent short position. And while I was on a plane to go teach over at my university in Italy, I landed in Italy, didn't check it, and I get to my class, and I'm teaching class, and I pull up some numbers, and it was like, wow, like over 100% gain on an FDA approval of some drug, and just monstrous pop. So here's my rule for drug stocks and pharmaceuticals. If it's a one-trick pony, it's a biotech or a pharmaceutical that's got one or two products, I have no interest whatsoever. If it's something like Pfizer or Eli Lilly or Merck that have a whole portfolio of hundreds of different drugs, then yeah, I can be a long-term investor in those. But I will never go for small pharma biotech drug stocks. It's just too crazy. Way too crazy. Let's see. That's the question to ask an employee from those companies. Nvidia. All right, Michael. I'm going to entertain you. I'm going to entertain you today. I'm going to entertain my audience with this one. Let's go to ABEO. I have a pretty good feeling I know exactly what this chart looks like. Survey says... Okay, brother, this thing has been flatlined since 2022. Flatline since 2022. ABEO price target on FinViz is 21.25 that I'm trying, and ABEO going up. Who cares who says where it's going to go? Who cares? Do you know the person at FinViz? Do you trust the person at FinViz? You know them personally, and you know how they pick their styles? You don't know whether they're just saying that to get you to buy it because they need to unload their shares at a higher price because they're underwater. Never listen to what anybody else says. Don't listen to what I say. Do your own research. My thoughts on this market are my thoughts. And as many of you guys have noticed, I'm wrong a bit, right? I don't care. I mean, I'll apologize if I'm wrong and I don't feel that I should. I'm allowed to make an opinion about the markets, but I'm usually putting my money on the line. So... And I'll tell you when I've got trades open. Like Amazon's the only, for my TraderMerlin account right now, the only position I have open is my Amazon position. And it's a decent sized position. It's like 300,000, but not massive. Don't listen to FinViz. Don't listen to Jim Cramer. Don't listen to Joe Kernan. Don't listen to Fox or Bloomberg. Don't listen to any of that garbage. If you're reading a headline, if you're reading an article, generally it's biased information by the author of that article, trying to promote you to push you into a direction that they want you to go. ABEO, I do not care what this company does. I don't care. Look at the chart. This chart sucks. It's flat. It goes nowhere. The price target is set by bankers, and upgrades is where the price target comes from, the bank data program. No, Michael, we've already gone through this, and I'm not going to go on to it, but typically an upgrade and downgrade is issued by a bank to get their customers to buy something. So if they upgrade it, they're trying to get you to buy it so they can unload the position. They need to create buyers. They need to create sellers. That's what they use upgrades and downgrades for. This stuff is bad. Bad. So I would not mess with this one. I don't care who says anything about it. The chart looks like garbage. The only saving grace here is that you're at a double bottom and you're back to this bottom from last April. Keep in mind that almost everything in the market is running to all-time highs and has a nice little uptrend going up right now. This does not. So, nope. Leave it alone. Okay, cool. Well, I'm happy for you. This does not look like a winner, and it does not look like something that I want to buy into. It's not looking that great. Again, you want to own things that are trending, and this one is not trending. It's only been flat since its 89% drop. Yeah, and this is one example of that, why I don't buy biotechs and pharmaceuticals. This is a therapeutics company, so we'll put that in the drug category. And you look at volume, you've got relatively low volume. $1 million. Well, yeah, just recently breaking $1 million on average, so nah. Nope, not interested. BB, huh? Oh, BlackBerry. Hey, you know what? Whoever, Patel says it looks like BlackBerry. At least BlackBerry has a trend going. Higher lows. So it's clear that BlackBerry's got some strength to it because it's making those higher lows, but it still hasn't turned that corner. And honestly, does anybody really like BlackBerry? Not a fan of that one. Not a fan of BlackBerry. All right, last one, DLO. This is the one you've asked about this one in the past. So we mentioned that if you're looking at it, you were trying to buy near the bottom, which is that 1284, actually lower than that. You were looking to buy it right around 1260. Not bad because it's making those higher lows, but the fact that it closed down below the low end of the range, which was from this low on September 4th, not looking good, right? That should actually be your stop loss. Should have been taken out, and you should have been stopped out of that one. So not that great. Obioma, good to see you, my friend. Hope you're having a great day down there in Lagos. It's on the list of places to go. If I ever make it to Lagos, I'll be kitting you up for a tour guide. I used to love BlackBerry's keyboards. Yeah, I don't know. I never had a BlackBerry. I had a Palm. I had all the other devices, but the simplicity of the iPhone just makes it much easier. Okay, let me move on to economic calendar information. So we talked about that retail sales number. We did not talk about the PPI number, which is much higher, right? So that is not a good sign when we jump from negative 0.1 to positive 0.3. Now the good news is we're positive, we're above zero, right? We'd like to see a little bit of inflation, but the higher this one goes, the more likely the Fed is not going to cut rates. And those numbers have changed dramatically. Let me bring up the Fed rate piece here just so we can have that as reference. It was 50%, or actually it was 30% the other day that they were going to cut rates 25 basis points. Now it's back up to 84%. So big swings in the mood with regards to FOMC. I do believe that they are going to cut rates one more time. Part of it is we made that list, or I made the list that has all the different voting members of the Fed, and this list has not really changed. If you look at that, again, there's two people we know are anti-cutting rates, and that's going to be, as I mentioned before, Schmidt and Collins. You have two that are on the fence, which is Powell and Williams. I think both of them will go with the majority. I don't think that they're going to really vote independently here. So I think that they're going to vote with the majority. As you can see, Barr, Bowman, Goolsbee, Jefferson, Masalam, Miran and Cook are all in favor of it. So most likely, I think you'll see 25 basis point cut, which is justified by the statistics and odds right now. However, that did not include the most recent economic data. So if I go back to this chart, the expectations certainly were that we're going to see 0.3%. What we should see tomorrow is we should have seen consumer price index. We should have seen consumer price index, but we did not. We did not get our CPI data for last month. They're not going to release that one, which is stupid. Doesn't make any sense to me. Remember, next Friday, not this coming one, but the one after that, we are going to get our core PCE price index. Now that will be, just 1 week before the Fed has their meeting. That could sway this significantly. If that core PCE price index comes out elevated, and I'll bring it up for you guys so you can see that calendar. It's going to come out on the 5th. If we see that, I don't think that she got fired. I think he was trying to. Here's your core PCE. So they don't have the expectation, but right now it's at 0.2. If that comes out as anything higher than 0.3, I think you'll see some people jump ship here and not be supportive of a rate cut, right? Because if inflation is higher, they actually would want to increase rates to slow it down. And right now, I think that that's probably the most important piece. Unfortunately, a lot of people believe that the unemployment rate is the most important piece right now, which surprisingly should come out next Friday as well, the first Friday of the month, but that's not going to happen. Who knows when that data will be released. Let's see what we got on Friday this week. No major economic data this week because it's going to be a short week. Going to be a short week. Let's see, 84% even after. Yep, that's what it says. But the PPI number wasn't dramatically high. Remember, if you annualize it, 12 times 0.3 gives you a 3.6% inflation rate for the PPI, which is not great. Remember, the Fed said 2% what they're shooting for. We'll see if that we ultimately get to that level. But I think that the next Friday is probably the most important day. The other pieces on this that were not good. I don't think that this is good here. It's the S&P Case-Shiller Composite 20 Home Price Index. We've been watching this trend really since May of last year. Almost every month, lower and lower and lower and lower and lower and lower and lower. So not good. The good news is we're still positive, but that means that home prices year over year have only increased 1.4%. Why is that important? Well, because if you're paying, let's say, 3% on a mortgage and your home value has only increased 1.4%, your net delta loss there is 1.6% for the year. Obviously, this number would be great if it was higher than whatever the mortgage rates are. That would be the beneficial one. The trend is your friend until the bend at the end is my favorite phrase. And as you can see here, it's looking pretty ugly that like we could get below zero here. So this was not a good piece of data for the morning. Even though we met the forecast, did not look good. You're also seeing negativity in the Richmond area with regards to manufacturing. I mean, this has been abysmal since 2022. Only 4 times have we been above zero on the manufacturing numbers in Richmond. Obviously, we're not the manufacturing powerhouse that we used to be, but for goodness sake, let's get something back on track here. Not good looking there. What other data did I have? Pending home sales. This is actually fairly decent, although it's like a bad EKG. It just seems to bounce above and below zero repeatedly. Right now, we came out at a 1.9% gain in pending home sales. That's good, right? We want to see more homes selling. That means more action, more business, more sales, and that may drive prices up. Now, tying back to that, and I know I'm jumping from economic data into the bond market. Here's your 10-year bond, which is the basis of the 30-year fixed rate mortgage, and it's been a really aggressive sell-off for the past 5 days on that 10-year bond. Right now, you're sitting exactly 4%. Exactly 4%. I still do think that it's possible for us to get to this measuring object from that head and shoulders pattern or descending triangle pattern we had, and that could push us all the way down to 3.75. If that happens, I think you'll see more pending home sales, which would be good for the economy and spur things to the upside. So there we go. Total tangent. Let's see. Do you think CPI is more important than employment? Let's take away the titles of the reports. Do I think that the job situation is more important than inflation? No. I actually think that inflation is more important. Even though inflation is low, in my opinion, just my opinion, I believe that the unemployment rate is very low, right? Let's go and bring it up if I can find it, because I haven't had it for so damn long. We may not get my unemployment numbers. Let me go here and run a filter for U.S. markets only. So let's go none, put USD, we'll go none over here, and I'm going to add in employment and inflation numbers, apply the filter. All right, so let's go and look and see when the next unemployment number comes out. So we got unemployment claims, but we don't get the full unemployment number on next Friday, which is unfortunate. We really should. Let's see if they bump it a week. No, normally you get JOLTS job openings the same week as the unemployment rate. Not happening. Our unemployment rate is going to happen December 16th. That's after the FOMC meets. And here's the chart of the unemployment. So I personally don't think that this is bad at all. I'm going to do a much bigger chart here and show us all the way back into 2000 and... Let's go far back because this will let me go. All the way back to 2000. And you guys can see in the year 2000, unemployment rate was right around 4%. You get into 2007 and 8, like the low around there was about 4.5, 4.6. And if you put it into perspective where we are today at 4.4, that's not that bad. I don't think that it's that bad. And again, I go back to what Ben Bernanke was talking about, which he said full employment is 5.5%. So the fact we're sitting at 4.4, and the trend is clearly up. And I think there's no mistaking that. We did breach a new high here on the most recent unemployment numbers, but 4.4%, I don't think that's anything to be worried about. So I would have more of a concern if I'm one of the voting members of the FOMC to keep inflation under control. Because this is just people out of work, and if 5.5% is historically considered full employment, what I don't want to have happen on my watch, and certainly more damaging the economy, will be surging prices because we printed so much money. Then all of a sudden the consumer can't afford goods and services, and that has a much bigger impact on the economy. So I would argue that inflation is far more important than the jobs, the unemployment numbers. Did you get some? Crypto holders are fed up with JP Morgan? Who isn't fed up with JP Morgan? The hypocrites over there are substantial. JP Morgan... whatever. JP Morgan. Good luck to them. Look, they're the kings of the industry. They're going to continue to keep pushing price up. And it's not just JP Morgan. It's the MSCI, right? The makers of the MSCI index. For those who don't know, when I mentioned yesterday that they're going to remove any company, or they're proposing to remove any company, that has 50% or more of its holdings in Bitcoin they're going to remove it from the index. And that, of course, has been crushing MicroStrategy, which is down another 3.8%, down to 172. There is a demand zone, a small little demand zone right around 163, but I'll be honest, I'm not touching it. I think that there's just a little too much pain here, and I think you could continue to see this just fall apart. Volume is surging. I'd really like to see what the short interest right now is. I know you'll tell me to go to Yahoo and see what the short interest is. Unfortunately, that information is so lagging. I'll bring it up here just so we can do it, but it's usually very, very lagging. Let's go MSTR. Oops. How about MSTR? MicroStrategy or strategy. Here we go. Let's go look at the statistics and check out the short interest. Right now, 8.8, but that's as of October 31st. So we won't get the next update on short interest for another 6 or 7 days. Probably a little bit longer than that. But 8.8% is not that bad. You look at stuff like Apple, and Apple's generally way lower than 8.8. But let's see what's Apple at. Yeah, Apple's less than 1% short. Let's see. Let's type in Google. Let's see who's getting smoked, because if you're short Google, you're just getting annihilated. 0.33%. Very, very low. And what was the other great chart we saw? Eli Lilly. Anybody else getting crushed here? 0.72. So certainly at 8%, MicroStrategy has got a much higher short interest than some of the other companies, but it would lead me to believe that based off this price pattern here, you're going to see much higher short interest. Is it time to go back to sleep? Is he's gone for good? Are you talking about MicroStrategy? It won't be gone for good. I'm curious whether it causes a cascade. And what I mean by cascade is if they do get to a liquidation point that they have to cover their bonds, does this become one of those textbook stories, kind of like an Enron, right, that fully imploded and caused all the crypto to fall apart? It would line up perfectly with the 4-year cycle. The 4-year cycle is a 70 to 80% downtrend in Bitcoin in a short window of time. And as we can see here, the Bitcoin is down another 1.04% today. I've already mapped this one out for everybody, and I kind of don't want to do it because it just makes my stomach turn. But if we go from the peak in October to where you go down 70, let's call it 75%, you're looking at 31,000 for the price of Bitcoin. And that would be, by the way, if we stretch this out, because remember that would be for the year, it would be all the way to about here. So this right here would be the kind of the trajectory that would follow if it followed the full 4-year cycle pattern of 1 year of down move, which typically it's 1 year exactly. And I don't know why that is, folks, but right now we're actually far more accelerated in that 1 year sell-off so far. We started in October, which is a little bit early, and we're down significantly already. I do think that this time is different. And there was a question that popped up about this. Let me see if I can read this one for you. Let me see where that question came from. No, it was all about kind of getting on me about not following my strategy. Oh, that was on YouTube. I'll get to that one on tomorrow's show. But Fintel has short interest at 10.3. What's the lag time on that one, Mickey? What's the lag time on that? Because usually they don't have to. There's like not a real-time source that I've found. If Fintel is real-time, like as of today, that's pretty good. Yeah, very good to know. All right, let me run into tomorrow's activity, what we got cooking. We went through a bunch of economic data for today. I will remove all my filters here, and remove all the filters. Bam. Okay, so let's talk about what's going to happen mañana. Obviously, it's going to be an interesting day because the markets are closed all day on Thursday, half day on Friday. I will not be doing a show Thursday or Friday, so tomorrow will be the last show of the week. For U.S. markets, though, we do have a lot of good information. You can see that we have the durable goods orders. That's expected to drop significantly from 2.9% gain to 0.5. No bueno. But, you can see here with the durable goods orders, that's always very, very, very volatile. Now, for other news, you do have crude oil inventories, and I think that's going to be interesting because look where crude oil is sitting at today. It was down 1.51%. Let me get rid of this volume on here and zoom in a little bit and get rid of that volume because it's hiding it. You're right. You've tapped in that lower demand zone again. Multiple times it's dropped into that when we tiptoed down into it today. That demand zone, which is definitely getting eaten up, is between $56 and $57.32. So, that might be a bounce point, but Remember, those highs are getting lower, 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 lower. Not looking very good right now for crude oil. Your worst performer out there today was Bitcoin. Even though we had a great rally yesterday, just could not hold on to it. And 87,785 is where the futures markets are at. We already looked at the 10-year bond, which aggressively selling off right now, at least over the past couple of days, which is great for anybody who's looking to buy a house. Your dollar index. This is an interesting one because we talk about ascending triangles or cup and handle patterns. Notice I had this yellow supply zone drawn out. That was at a peak of $100.36, and the bottom of it was 100 even. Well, we did tiptoe above it a couple days ago on Friday, and now it's responded to it. It's sold off. So what you want to see here, if you believe that this dollar index is going to be going up, you want to see this current candle, the candle for today, kind of flatten out and then come back and charge at those all-time highs again and form a cup and handle or a ascending triangle pattern and move to the upside here. So it still looks pretty good from an uptrend perspective, but yeah, not a great day as it fell 0.38%. Now going to the indexes, which were the stars of the show, that changed in the after-hour session, but NASDAQ ended up coming in fourth place at 0.55%. Again, there was some of the Magnificent Seven that did very well today, all except Nvidia. S&P 0.90%, but look where it's at. We talked about the dead cat bounce, and I mentioned that we could probably see it rally up into that yellow zone by Friday. Now we are in it already. Didn't think we'd get to the next day on the S&P, but the top end of that zone is 6801. If you're bullish and you don't want this to be a market rally, then we got to get above that 6801. If that happens, you've got two more challenge points before we're off to the races. That next stopping point is going to be 6874 to 6900, and then of course you've got all-time highs to contend with, and then we are off to the races to all-time highs again, which is going to be right around 6953. So looking pretty good on that S&P. Big question is what happens tomorrow or by Friday with this yellow box of supply that we're in right now. Gold also a little tick up, although its chart doesn't look as exciting. Just kind of feels like it's calming down like the waves after you drop a pebble in it. Or rock in it. You get the big swings and they slowly get smaller and smaller, so nothing really that definitive here from gold. And then small caps, Russell 2000, same picture. Monstrous surge to the upside after that beautiful shooting star and big sell-off. All in all, looking great. Same thing as the S&P. It's about where are we going to go from here, right? 2.17% gain today, but right into overhead supply. I mean, this 3-day rally for the Russell has been phenomenal. From the low that we achieved on Friday to our peak today, you're talking 7.6% gain in 3 trading sessions. So hallelujah, hallelujah. You too, Rob. Have a wonderful evening. Steve says, if Russia and Ukraine reach a deal, does that force oil lower with Russian oil back in line? Maybe. Certainly peace over there would, lead the door to sanctions being dropped on Russia. Does it drop overnight? I'm sure whatever that peace deal may be, if it actually happens, would include more distribution for Russian oil. Big Eb says, Whiskey Wednesday? Yes. This has been a week, man, I'll tell you. I'm a pretty transparent book, but I've had a lot of stuff happen this week that I cannot disclose to the audience for sake of privacy. But man, I am definitely in the mood for some whiskey, and I will have a glass of whiskey with you guys on tomorrow's show. Earnings-wise for mañana, let's go and check out that earnings calendar. Let's go to Wednesday. You've got let's do my market cap here. You've got John Deere, BYD Motors, so great cars with BYD. I wish we could get them here in the United States. And Lee Motors as well. Other than that, that's pretty much it. So economic calendar is going to be your big news for tomorrow, and there's quite a bunch of big stuff, which we'll talk about on tomorrow's show. So that means a lot to talk about for our final show for... Not for February, not for November, but this will be definitely the last show of the week. So if you guys have something you want me to discuss, you can email me at TraderMerlin@gmail.com. It's on the screen right there, or you can put your comments down below any of the YouTube videos. Hope you guys had a fantastic remainder of your day. John, thank you for that question on Nvidia. That was a great question. It caused me to dig and learn some things I did not know about Google's business. And I guess you're right. You're right, Lori. It is the last show for November. So tomorrow, the 26th, will be my last show of November. And then we got the home stretch, getting towards that Santa Claus rally. So I will see you guys tomorrow afternoon. If you want me to discuss anything, email me at TraderMerlin@gmail.com. I'll see you tomorrow.